sir, you already know this your boy Behaves. We back with another one. Let's go ahead and get right into it. You know we don't like to waste nobody's time. Today we're gonna be touching bases on GameStop. We're gonna be seeing, is it a buy? Is it currently a buy? We're gonna be talking about a little bit of what happened with it, and we're just gonna be, all around the whole topic of GameStop and letting people know, to be prepared next time. Don't get FOMO. Don't get the fear of missing out. Me personally, I haven't touched any GameStop. Not saying I wish I would've. I mean, I love the insane run that it did, but I knew it never pulled back enough for me to get in because I'm a professional trader and I never chase. I don't chase no stock. And then, far as like what was going on with GameStop and all them other stocks, like they was just being hyped by Wall Street bets and Reddit. So it's like, I'm not the type of person that run behind everything that everybody else running behind. I'm not doing what everybody else doing. I'm doing the opposite. While everybody was chasing GameStop, running behind GameStop, I was making money on these other plays, my same plays I've been making plays on since day one. These up and coming penny stocks, diamonds in the rough. You feel me? That's why I'm making this video, to reach some of you GameStop folks and bring y'all to a real tribe where we making real plays, making real money. Because GameStop, that's just a one in a lifetime chance, one in a lifetime play. I mean, over here we making plays every single day. We finding hot stock picks every single day, not just a one-time thing. So, not bashing GameStop or nothing like that, but I'm just keeping it real. So let's look into it, y'all. Right now, GameStop is trading at about $51. So it opened up at $56 yesterday. It had a high of $57. It had a low of $46, dropped $10 a share. 52K week high is $483. 52K week low is $2.57. Okay. Now let's see what they talking about. Let's see what the headlines got to say about it. Let's see what the big guys saying. Let's see what they got to say. Shares of GameStop fell more than 20% to a session low of $46.52 a share on Tuesday, following an 80% drop last week for its worst weekly performance ever. At its all-time high on January 28th, the stock was worth $483 a share. GameStop came into the limelight 2 weeks ago when an army of retail investors who coordinated trades on social media pushed the stock up 400% in just a week. Okay. Though, with all this hype that's been going on around GameStop, even though there was a trash company, they was on the verge of actually going all the way broke, all the way to zero. This was a big change around the game for them. With all this momentum and all the cash that they raised through all this whole experience, they do got a chance of actually becoming a profitable business. We're going to get more into that, though. You got the Chewy co-founder, he's invested, and once he got invested, he's looking for a turnaround for this thing. So there's still hope, but still though, it's so many opportunities in the market. I wouldn't just hope and pray on this company. I'm just being real with y'all. So let's see. Say, don't count out GameStop. While the prevailing consensus says that the frenzy surrounding the video game seller stock is purely speculative, and that the eventual demise of the brick and mortar retailer is the foregone conclusion, some positive developments are brightening the outlook for its business transformation, and with a little magic from Amazon founder Jeff Bezos' playbook, a real turnaround is a distinct possibility, one that has the potential to make GameStop an e-commerce powerhouse for gaming, PC hardware, and consumer electronics. The key figure in GameStop's comeback story is Ryan Cohen, formerly the co-founder and CEO of online pet supply retailer Chewy. Since buying a large stake in GameStop last summer, the internet entrepreneur has become increasingly involved in shaping the company's future. So, yeah, like I was telling y'all, so it could be a turnaround for GameStop. They could use all this momentum and all this hype to actually better their company and build a company. They could build up off this. So I'm not all the way bashing it, but what I am telling y'all is you want to be prepared, not surprised. This is basically just a stock that people got lucky on. Like, it just got hyped up by a whole bunch of kids, whole bunch of young folks, millennials on Wall Street bets, and a lot of folks got lucky. I'm proud of y'all. I congratulate y'all for, for getting that home run. But if you didn't, but dealing with this market, if you don't follow the rules and play with, treat it like a business, play with rules, have business, have a business mindset, cut your losses and stuff quickly, you ain't gonna last long. All the money that you earn, all the money you gain, you'll give it right back. So, you feel me? That's why you want to be prepared, not surprised. So let's go ahead and get into it though. Let's see what the big boys doing. We always like to go and see what the big boys doing, because they like to hate on the companies. They like to hate on the companies in public, but they be buying it up in private. So let's see though. Let's see what it's looking like. The ownership summary. Institutional ownership, 109%. Increased positions, 99 holders. Decreased positions, 118. Held positions, 33. Total institutional shares, 250. So my perspective on that is that actually kind of shocked me. I expected it to be way more decreased positions than increased positions. And when in reality, it's almost about the same. And then if you include the increase in the held positions, it's above the decreased positions. But still though, decreased positions is hell of a lot. That's a hell of a lot of decreased positions. Then you have new positions, 51, sold out positions, 35. Last but not least, y'all, let's go ahead and look at the chart. Check the graph out. GME. So let's see, can we predict about where this thing is going? It opened up at about $57, $57.75. Then we had a little dip, the 52. Then we had a huge dip to 46. That's $10 off per share. When we dipped down to 46, it regained itself. It came back up to 50. It dropped to 48, came to 50 again, dropped to 49. If we could get past that 50, we could possibly break out. It got to $56 during after hours, not normal trading hours. Then it dipped. Then it dipped back. And now it closed at $50.95. We look a week ago, it dipped hard to that 53 and spiked up. It was a nice day trade right there. Look like 50 is a support, 49, but I'm pretty sure it's gonna break that. It could probably, the next stop will be that 43. It'll break down to 43 and potentially go down to 31, then 19. Then we go back. It could potentially. So my prediction on GameStop to sum it all up would be, I feel like it will tank. It will fall. It will get most definitely cheaper. I can see it falling down to the 17s, the 15s, the $16 range. And I also can see it pulling back because so many people is probably short in this position because they know the financial aspect of the company. They know what happened. They know what really went on. But the market is also manipulation. Like the market is manipulate you. So with so many people anticipating nothing to go down, with so many short sellers, they would squeeze on short sellers again. So if too many people, if they over short this company like the hedge funds did over 140%, try to be extra greedy because they know without a doubt that this thing is tanking, and try to be extra greedy, it could turn around again and turn up, go from 50 to 100 to 120. But them high prices like that is not sustainable. That's what I'm trying to get out there. Them prices is not sustainable. Right now, trading is a bit different how it used to be. A lot of people used to go out fundamental technical analysis and all this good stuff. Now it's reading the charts, reading the patterns. A company ain't got to be financially fit to take off. You get what I'm saying? Like, anything can happen in the market. So I just want y'all to be prepared, not surprised. That's my update on GameStop. If anybody wanting to get in, wanting to participate in it, my advice to you is you wait on a huge pullback, buy a very, very small amount of shares, because this could be very volatile and have your portfolio like a roller coaster. I buy just, 1%, 2% of my portfolio if you really, really want to get involved. Me, I'm so turned off by GameStop. I don't even, on the run up now. At the beginning, I probably, was a little turned on by it, but still that wasn't my style. But right now, at the moment right now, I'm all the way turned off with GameStop. I don't really care about their future. I'm not really. You get what I'm saying? And I know it's a lot of y'all diamond hands out there. Y'all probably be mad in the comments and stuff because y'all in love with GameStop. But it's all right. I'm just trying to teach y'all how to be real investors, real professional day traders, real professional investors. And doing it with GameStop, I just wish y'all the best. You already know. But this your boy B Hayes. If you like these type of predictions, these type of updates, it's right where you need to be. We be dropping every single day. Don't forget to use the link in the description below at Webull and get you some free stocks. And you already know we out, man. Peace. God bless y'all.